last week we saw that the Congress in the States finally got together and approved a $2 trillion stimulus package, again, which I think is good. Need to give money to the people and small businesses and help any way that they can. But the problem is, during this whole 10-year supposed recovery, they never did address the deficit. We had the United States, you can see going back right to beginning of last century, the actual federal deficit or surplus was pretty stayed around the zero line, and then it dropped, and then in the 80s when we had a small recession, and then actually when Clinton came into power we had a surplus. But since then it's dropped, and then we had a real bad deficit in the financial crisis of 2008, recovered a bit from that, but never did go positive. So the overall debt has just continued to increase. And now when Trump got into power, one of the first things he did to appease corporations, that was lower taxes. And then also he's increased defense funding. And now we've got this coronavirus, and they're spending $2 trillion. And so we know this is going to come down, probably way down here, into trillions of dollars. The U.S. economy is about 16 trillion, so we could be looking at 20% of GDP this year for the deficit, which is multiple times anything in the past. So again, it's just this whole debt spiral, and who knows how it's going to play out. So far as the companies I bought, I mentioned Nutrient. It's the largest. It was actually formed in 2018. It was a merger between Saskatchewan Potash and Agrium, which were two big fertilizer companies. So it is the largest fertilizer company in the world, and it has retail outlets that sell different fertilizer, seeds, whatever, in North America and Australia with 1,400 locations. The retail centers sell fertilizer, crop chemicals, and seeds directly to farmers. And this was a highly fragmented sector of the economy, and they're acting a bit of a consolidator, so that's been helping their earnings. And also has an online platform, and the retail side accounts for about 6% of gross profits. And then it produces the three primary fertilizer needed in agriculture, and that's potash, urea, nitrogen, and phosphate. And they got a 20% market share in potash. And they typically don't try to take market share away from other companies. So they try to keep the price as stable as they can, but there has been some big fluctuations in potash prices, which is a bit of a risk. And it's one of the lower cost producers for potash, and its nitrogen business actually does pretty good, because the biggest input cost for nitrogen is natural gas. And we know natural gas prices are the lowest they've been, and the nitrogen is produced in Canada. They can use low natural gas, which is probably priced somewhat the lowest in the world, so they do have a bit of a cost advantage there. On the phosphate side, they're kind of in the middle of the curve, not the cheapest and not the most expensive. So there is risks here too. Weather's always a big thing, how much are they gonna, and the global surplus or amount of wheat or grains in storage, but from what I've read, that's kind of coming down. They gotta replenish it a bit. They had a bad, I think, season in the States last year because of flooding, so most likely plan more this year. And even if the farmers do get in some trouble with interest rates increasing, we know usually the government step in and help the farmers pretty quick. So it has a price to sales ratio of 0.95, which below 1 is quite good. And its price to book, it's actually trading below book value. So to me, that makes it looks pretty, from a value perspective, pretty good. Its quarterly dividends have fluctuated quite a bit, from 95 cents a quarter to as low as 25% a quarter, but it's always paid a dividend since 2013. And if you ever want to know the dividend history on a company, I found an excellent site, and it's called dividendhistory.org. So just put that into Google, and it carries thousands of companies showing their dividends going back 10 years or so. So that's it for Nutrient. The other one I mentioned was Brookfield Infrastructure Partners. Morningstar has a 5-star rating on this, and which is their highest, and it's got, like I say, about a 5.5% yield. And ARK Investments, read a report on this company, have like a $66 target on it. It's trading at 50 right now. And again, it's an infrastructure, so it's got toll roads around the world. It's got telecom towers, which is kind of a newer part of their data infrastructure. So they're buying up cell towers basically, and it's got regulated gas transmission, and it's also got investments in rail. So basic infrastructure that we will need unless we go back into the Stone Age or something. And all these things have relatively high barriers to entry, so the competition is somewhat limited. They've got resilient cash flows, which I said is important, because 95% of their cash is either regulated or in long-term contracts, and about 75% of those contracts are indexed to inflation. It's also geographically diversified. Let's say India, North America, Brazil, and so on. There is some, of course, FX, currency risk, because it is getting money from different countries, and depending on what their currency is doing at the time. They do some hedging, but they did no hedging for their assets in Brazil, so they are exposed to the Brazilian real. If it loses its value,